Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings. And today we've got a little gem that might just be a sneak peek at future payouts. So let's dive in. So we're looking at an important report from Hancock Corporate Income, Incorporated, a company that deals with corporate income. This particular filing is an 8K, which is basically a report for big events happening right now for a company. Think of it like a company's breaking news update to the public and the government. The date at the top is the 25th of November, 2025, and it tells us that whatever we're about to discuss happened on or before that day. This is pretty current stuff, giving us a real-time look at what this company is up to. Now, the really interesting part here is under results of operations and financial condition. This is where companies usually tell us about their financial performance, like how much money they're making or their current financial health. Here is the headline on the 25th of November, 2025. The big bosses, the board of directors at Hancock Corporate Income Incorporated decided to give out a payment to their shareholders. This payment is a distribution, which is basically a share of the company's profits. They're giving out $0.04375 for every share of common stock that people own. This payment is scheduled to go out on the 15th of January 2026, but you had to be a shareholder on the 25th of November 2025 to get it. It is like a thank you from the company for investing in them. And get this payment translates to an annualized distribution yield of 5.12%. Now, that annual distribution yield means if you look at the price the company sold its stock for back on the 26th of November 2025, this payment over a full year works out to more than 5% of that price. So, for people who own the stock, this is a clear signal that the company is generating enough income to share it back with its investors. It shows they are not just growing, but also making profits they can distribute. It's a pretty solid yield, especially in today's market. Looking at the company itself, Hancock Corporate Income Incorporated is based in Maryland. It is incorporated there, meaning that is where it is legally registered as a business. They've got a commission file number and an IRS employer identification number, which are just official identifiers for businesses. It is a bit of a mouthful, but essentially, this company is set up to manage and generate income, likely from corporate investments. Interestingly, the filing notes that Hancock Corporate Income Incorporated is an emerging growth company. This means it is a relatively new company, or at least one that has not been around for a very long time, and that comes with some regulatory perks. They can use different rules for accounting, which can sometimes make their financial reports look a bit different from older. More established companies, they've also elected not to use the extended transition period for new US accounting standards, which means they are adopting the latest accounting rules quite quickly. This suggests they are aiming for a more transparent and up-to-date financial presentation, even as an emerging company. And the person signing off on this report is Bilal Rashid, who is the Chief Executive Officer or CEO. The CEO is the top person in charge of the company. So when they sign off on these reports, it means they're confirming that all the information is accurate to the best of their knowledge. This is a really important procedural step that shows accountability. So let's wrap this up. What does this filing really tell us? Hancock Corporate Income Incorporated is a relatively new player in the corporate income space, and they are actively distributing profits to their shareholders. The 5.12% annualized yield is a concrete number that investors look at, and it indicates a healthy income stream for the company. As an emerging growth company, they are following the latest accounting standards, which is a good sign for transparency. This isn't a report showing massive revenue growth or a huge stride in market share. Instead, it is a straightforward update about a dividend or distribution payment. It tells us they are managing their income well enough to reward their investors, and that is a key characteristic for income-focused companies. The company's direction seems to be focused on generating stable income that can be passed on. The main risk here is that, like all income-generating companies, their performance is tied to the broader economic environment and the health of the companies they invest in. However, consistent dividend payments are a strong positive signal. Alright, that is our breakdown of Hancock Corporate Income Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.